So Shauna, thanks so much for joining me for this virtual fireside chat. For those joining, I'm Sarah Storr. I'm a managing director at Silicon Valley Bank. And I work closely with a lot of the marketplace companies in our portfolio, and would be happy to connect with any marketplace leaders, who are interested in learning more about what we offer our clients. In this session, we're going to be speaking with Shanna Tellerman, the founder and CEO of Modsy, about maximizing your customer acquisition cost ROI. And we'll focus on early stage go-to-market customer acquisition strategy and the lessons Shanna has learned along the way. So Shanna, let's start with some background. Please share the story behind kind of why you started Modsy and what Modsy is today.
Sure. So Modsy is an online design service. And probably like many of you, when I moved into my home with my now husband, this home, we ended up trying to search for furniture and ran into that challenge of trying to visualize, like, how does all of the furniture go together and how does it look in your real space? And so at that point, I was like, there's just nothing out there that actually can bring it all together. No affordable design service, no technology. And I decided it's got to happen.
So interesting. So since you identified kind of as your target client for Modsy, how did that help you kind of shape your initial customer acquisition strategy?
Yeah, so I mean, we had many trials and errors in our early acquisition strategy. I think like many customers, there's nothing really out there at the beginning, and so we just we put a lot of things up at the beginning that didn't necessarily resonate with our customers, and we learned a ton by trial, just through trial and error.
Got it. So what were some of the original channels that you used in the beginning?
So at the very beginning, our first channel we tried was really Facebook. We found it to be a very efficient digital channel. You can spend a very, very small amount on Facebook. You can track daily. It's super efficient channel at the start. Search is the other super efficient channel we tried right at the beginning. And search, just like Facebook, you can spend very, very small incremental amounts. You can track daily. You can see everything that's happening. So, I mean, at the beginning, you have a very, very limited budget as a founder, as a CEO, and you're constantly trying to figure out everything from messaging to creative to kind of the site experience. How does it all come together in your flow? And you don't want to waste a lot into various channels that have kind of poor tracking. So our really, really early tests were both low budget, but also kind of just channels where we could really hone in on the analytics. That obviously changed a lot along the way over a couple of different pivots in marketing and acquisition strategy. But at the very, very beginning, honestly, the very best channels are those that are customer driven, like referral or word of mouth.
Got it. And I know a lot of people are using, Instagram and Facebook like you did. What are some lessons you learned or some tips for a founder who isn't familiar with the platform and just kind of starting out?
So I think the first thing, I guess scrolling it back, right? The very, very first thing that you have to figure out and hone in as a customer, as a acquisition marketer, is your messaging to your customer, right? So if you don't understand, one, who that core customer is, but two, if you haven't kind of user tested that messaging, you're not going to have super effective advertising on any of these channels. And so before we even really got deep into Facebook advertising, we spent a lot of time kind of thinking about that conversion funnel, thinking about that core user, user testing, and then iterating messaging. The second kind of the big thing, as we moved into Facebook, we start, a lot of people will talk about creative and they'll talk about the ads and the importance of the ads. I think there's also a threshold of spend that people don't really speak about that's an important component of being successful on that platform. So when we were starting, we were spending into Facebook really, really small amounts each day. We were starting to see some success, but the CPAs were honestly kind of all over the place and actually higher at some points than we could have possibly imagined would be sustainable. as we ramped up our spend, we actually saw that we were able to get a large enough data set that the ads themselves would be able to be optimized and learn, and that our audiences were getting large enough that we could kind of create really strong lookalike audiences. And so while it's hard to get to that threshold because you often don't have the capital, there are certain thresholds. For us, it was around 30,000 a month. That once we hit that threshold, we actually saw a pretty big unlock in terms of our ability to optimize our ads and our audiences, and to start to see a pretty significant decline in our CPAs, which became the kind of the new normalized CPA.
Got it. And have you also used influencers on Facebook and Instagram to kind of help boost eyeballs?
Yeah, so we did a bit of experimenting with influencers early on. We did both podcasts as well as influencers. It's always been a really successful channel for us. The challenge with both of them, I think, is the scalability, because it's kind of a hit factor. You both need to find an affordable influencer, one who's good at kind of generating sales, but also that resonates with your particular customer base. And so finding that overlapping circle can be kind of a game of hit and miss. So you might think you've kind of lined up the perfect influencer who maybe has like resonated with similar categories and provided good sales, and they might miss on your brand, and vice versa. You might find one that you didn't necessarily think was going to have a great hit rate, and they might be a really big unlock for your brand. And we saw the same thing kind of with podcasts. We actually had like one really successful early podcast, and then they had a blog as well. And then we had one or two others that we expected to be kind of big hits, and they kind of fell flat. So influencers are, I think, almost more like a brand ROI, or almost like you kind of think of them somewhere between customer referral and organic and paid spend, because they're really hard to optimize and to kind of predict.
Got it. And as you've kind of added new channels, what advice do you have for folks for adding those channels and being able to actually, understand the ROI, whether it's spacing the channels or the data analytics, or both?
Yeah, so like to kind of take you back to the history of like how we went through this, like I mentioned very, very early on, and I know we might talk more about this, but we really spent a lot of time crafting the site experience, conversion, and messaging. And then we were in Facebook and search with a little bit of influencers for a pretty long time. Like we actually found that both channels scaled pretty efficiently up to a certain level. So it wasn't really until our growth stage. So we hit a certain point where we said, we really want to start to like double, triple the growth rate over the coming months and the coming year, which was really like after our growth investment round. And we felt like we had kind of hit a point where we really understand that core user. We had enough data around kind of the existing customer base. We had provided enough designs to like understand the economics of the whole business, and we were ready to scale the whole thing. That then we started layering on like a multitude of new channels. Those new channels, to be honest, now in hindsight, we added too many too fast. And so that was in and of itself a mistake. One thing I wish we had done, and I think now is kind of a reset opportunity with COVID, but as you add new channels, your attribution obviously starts to get a lot more complex. So understanding one channel's impact on the other. When you add a handful at once, which we ended up doing because we were kind of not sure which one was going to hit or not hit, you aren't quite sure whether, for example, TV is impacting Facebook, like Facebook's taking credit for TV, or vice versa. We did some outdoor, we did direct mail. So we did a handful of things over a course of about 3 months, which sounds like it could be spaced out, but really to get clean data, you need about 6 months, in my experience, of data to understand a channel's performance, to ramp and to optimize that channel, and then to see its impact on your other existing channels. And so we ended up adding quite a few of them. We actually saw like a really, really nice bump in terms of like overall acquisition and growth, but starting to kind of piecemeal that apart became a lot more challenging because we hadn't layered that in like one at a time. So if I was going to go back and do it again, I probably would have started with like, we ended up adding mail, TV, probably a few more things, but outdoor as well, affiliate, I probably would have started with mail, and I would have given that about 6 months. And then I might have added on at that point TV, and then given myself probably 6 months to even a year, because TV is a little bit harder to optimize. And then after that, thought about an outdoor kind of geo-based approach.
Got it. Okay. And, it seems like there's some very specific skills and, knowledge sets required to really properly power a customer acquisition process and the attribution models. Not all founders may possess those skills. So how much of the customer acquisition responsibilities did you take on yourself in the beginning, and kind of when and how did you start staffing for these efforts?
Yeah, it's a great question. So I kind of think about 3 different roles in acquisition, and they're appropriate at different times and for different purposes. So there's kind of the traditional acquisition marketer who's going to be heavy analytics, is going to be looking at your ROI, is going to be deep in spreadsheets. That's sort of the traditional role. There's the other side of it, which is brand, and a lot of companies will invest very heavily in brand. And while you may not always be able to analyze the ROI, their argument is that if you invest in brand and you create this strong brand, you're going to end up seeing over time a more efficient marketing spend in CAC. And then there's kind of this role that I think we discovered along the way that I think is less commonly spoken about, which is really the user research oriented or kind of messaging focused marketer, which ended up being what we decided to do first. So we spent a good amount of time kind of applying a product level strategy to our marketing, which was we went through many different iterations of a website with our messaging and our core benefits listed out. And we went through kind of a whole user research round of test iteration. Until we really landed on a message that was super clear, like the customer could read it, understand exactly what we did. And you'd be surprised how many times like the message that we put out, we thought it was super clear, and what the customer would reflect back to us would be totally different. Sometimes even by the image that we were showing. So we're a design service, we would show a 3D model because we do 3D visualization, and a customer would see the 3D model and the visualization and think we were a DIY tool or a 3D tool and not a service. So we went through multiple tweaks until we found the right combination of image and then message. And that helped us really like hone in on that kind of initial core value. And then we went through the core benefits. Same thing. We ourselves kind of had our own philosophy about what we thought the customer cared about or how they would stack rank the core benefits of our product. We knew visualization, obviously, the ability to see in your space was like a huge benefit. We very quickly realized through all of the testing that actually the ability to have unlimited designs was the #1 core benefit. So the customer was fearful that they wouldn't land on a design that they loved. And so they often paused in the process thinking like, should I spend money on this if I'm not going to land on a design I love? And so in the process of going through the testing, we realized that's really the first benefit. We have to unpack that, and that has to be a central message. And then we were able to see like 3D visualization, as we suspected, was #2, and a money back guarantee was #3. But like I said, kind of multiple iterations until we realized that, and then we were able to kind of design that into the site. So that marketing position was like a really central hire for us. And then we were able to build for us the foundation of both brand and acquisition strategy off of that. Our acquisition marketer hire, we started with actually a consultant. And we had a consultant work with us on the messaging as well. I'm a big fan of doing consultant hires first, because I think you can, one, get super experienced experts that come in and just do like laser focused projects. And they may or may not be somebody you actually need to maintain. Like a messaging project, for example, is something you can do once and then use that for like many months or years to come. On the acquisition side, we started with a low budget, so it didn't make sense to have a full-time employee. So we used a consultant, and then we grew pretty quickly. And so before we knew it, we had like overtaken most of her time, and then eventually we're able to actually grab her and pull her in full-time, and she's now our head of growth marketing.
Awesome. Thanks for sharing that. And it's really interesting, the different types of hires. And I think for every marketplace, it might be a little different, kind of which ones they prioritize first. We have some questions coming in that I will start reading because some of them have to do with what we're talking about, of course. What kind of mail did you do or would you do?
Yeah, so we've done two different types of mailers, like a solo mailer, and we've done one of the shared mailers. We've seen efficiencies in both. I'd say we see a much more efficient CPA in the shared mailers, but we've seen, I think for the solo specifically, we've seen that retargeting can be very effective. We also feel like there's more to unlock with solo mailers, but like some of the other more mature and a little bit harder to track channels, like it takes longer to optimize. So it's really about your level of spend.
Got it. Got it. And then I want to make sure that we address, the relationship between CAC and product pricing. So how influential has the customer acquisition cost been on your pricing changes over the years?
Yeah, that's also a good question. So when we started the product, and one of the unique things about what we're offering that may or may not be relevant for others in the audience is we didn't have a good comp in the market. So there's like offline interior design services, which honestly most people don't even know how much those cost, but they are perceived as very expensive. And then there was kind of this emerging field of online design, but there was no price benchmark. So I think your pricing tests are very different when you have like clear price benchmarks, and there's other competitors out there with a lot of brand exposure. We were not in that category. So for us, we came out with what kind of our best guess was, both for what a customer would find appealing, and then also obviously what we could afford from a cost to serve. And so we came out with actually initially one price at $99. And within the first year, we took it from $99 to $69 as we created some efficiencies and we changed the surface a little bit. We saw a huge correlation between the cost of acquiring the customer and that drop from 99 to 69. It was probably for us, the single biggest impact in terms of conversion on our site and our CPA and in like a whole year of optimizing our funnel and optimizing our channels. So we found that our customer is extremely price sensitive, and each of these pricing tiers makes a big difference. The next thing we did was we actually expanded our offerings. We took it from a single offering at $99, and we started to realize we have different segments of customers, some who are willing to spend more, some who are more price sensitive, and we're kind of leaving money on the table. So our hypothesis was we actually could probably raise the prices without seeing our CPAs go up dramatically. And so we slowly expanded into not just one, but actually 3 and now 4 different offerings that help to segment the customer appropriately. With that, obviously, our average selling price has risen dramatically. So that was very beneficial for the business. We did see some correlation to CPAs rising, but they didn't tend to rise at the same rate as the pricing changes. The biggest impact to like fluctuations in our CPA has really been a factor of channels, and the ASP, it tends to rise in line, but ultimately by segmenting, we could actually create some additional efficiency and a higher margin.
Got it. Okay. And bringing the conversation kind of into the current environment where we are today, I imagine there's a lot of demand for Modsy as folks are spending more time in their homes. How has COVID-19 kind of shelter in place impacted your business? And more specifically, how has it impacted Modsy's kind of customer acquisition strategy and spend during this time?
Yeah, so I mean, I think this is a really interesting moment. I had been saying for the last year or two, like it felt like we were hitting this peak point for marketing. Like all of the different channels were getting very mature, very expensive. There was a lot of dollars in the market between just like a very well-functioning economy, companies doing great, and then a lot of startups flush with capital, right? And so all of that spend was going into a limited number of spaces and slots in each of the channels, and every channel we were seeing was effectively having their prices like slowly go up. So I was wondering, like, how is this all going to normalize? Like, obviously this isn't sustainable because all of the businesses are seeing kind of a similar impact. And so this has been not what I expected, but I think kind of like the big right sizing that we've been needing to some degree in terms of marketing channels. So I'm pretty bullish on what the next year will look like. I think harder to project a few years out, but right now I think there's a tremendous amount of opportunity if you happen to be a service that can market into this environment. Obviously there's plenty of companies that are being impacted just by a lack of demand. We're somewhere in the middle. We're certainly not like a cleaning supply or face masks that are going to be in super high demand, but people are spending a ton of time at home, and like other services or hobbies and products people are choosing to do while they're sheltering at home. Home design is one of the things people are turning to. So we are seeing an uptick in terms of demand. People are spending more money on furniture. They're just kind of thinking about upgrading their spaces, especially home offices, et cetera. So what we've been looking at is, as I mentioned, we kind of went through this crazy scaling year. We added in a lot of channels very, very quickly. We saw some really useful and interesting results from it, but we kind of reached this point where it was very clear to us that our attribution model was not sophisticated enough, and partially because we had layered in things too quickly. And so this has been this like amazing opportunity to reset. And so for those that already had marketing, I think like thinking of this as a reset. And for those that are just at the beginning, thinking of this as like in the most efficient market that you could have possibly be getting started into. And then thinking about like layer by layer, which channel we add in what order, and making sure that those channels are spread out so that you have enough time to kind of really monitor the progress of each of the channels as you add them. So I'm excited to see how the next year from a marketing standpoint plays out. I think I'm, like many people, feeling extremely uncertain of the like consumer behaviors. And obviously there's a lot of uncertainty that's going to impact many people's businesses. But one thing is for sure, I think, is that we've got about a year of probably very efficient marketing channel spend.
Got it. And for spreading out, you mean about 6 months or so between ramping up new channels? Is that what you would recommend?
Yeah, I mean, I think for that, that's what would be useful for us. And partially, it's about the length of time from sign up to purchase, and purchase to our like understanding your ROI of the customer. So that could be shortened depending on the business type that you have. But you would just want to collect enough data. So if you have kind of your baseline of existing marketing spend, when you add this new incremental channel, you want enough weeks or even months of data to see, number one, how does that affect other channels? Like, do you see any lift in other channels, or do you see decline in other channels? Like, is this new channel potentially taking credit for sales that you used to see in a different channel? We see that all the time, especially with organic or search, like direct search will take credit oftentimes for other paid channels. And then you're going to want to also understand the ROI of the customer you acquired, because maybe you're very efficiently acquiring new customers, but it turns out that customer has a different behavior. Like their spend level is different, their retention level is different. And so those are all factors that are going to be really important to modeling out the future of that channel.
Got it. Let's tackle some of these questions. So how much do you need to test outdoor, and same for TV?
So they're very different. For TV, let's start there. In terms of spend, I mean, you're definitely going to need a larger spend. Like you can start at low levels, but much like Facebook, until you're spending at some kind of significant volume, you're probably not going to have enough data to make good decisions or to optimize off of. I think that the breaking point there is probably like a 60 to 70K per month spend at a minimum, and likely a little bit higher. And then that channel in particular has a lot of nuance, because there's a couple strategies that they end up recommending, but particularly it's a good top of funnel channel. And so you may want to consider something they call pulsing, where you're going to spend into the channel, pull back from the channel, right? So you kind of create a large amount of awareness, signups, you pull back, and then you pulse back in. And so you're going to want a couple of months of working within a specific channel like TV to be able to really, one, optimize that channel, like which, like where you're making your buys, like which channel, like what particular shows and segments. For us, categories, like we found news was really active. You're just going to need a couple of months to really optimize that, and enough spend in that channel. Outdoor, on the other hand, is really quite different, and that one is, for us, was a lot harder to measure, and I think historically has been a lot harder to measure. Generally, you're going to want even larger spend. So we went in with a much smaller spend amount, and we did our test in Seattle, and we also only did one test. So I think the best practice there So we basically did that one test just to kind of finish that story. And then realized like we weren't going to get clean data. And so we pulled off that channel, and that's a channel we plan to test again in the future. As we did the one test in Seattle, what was clear is actually at the same time Pinterest was doing a massive test, and so we knew the market was like pretty well saturated with some competitors at very different levels of spend, and you're kind of just looking for like a general, like a geographic lift. Usually you would want to complement it with like several different things going on. So you may want to do radio as well as like digital targeting. So you may want to also spend a little bit more in that geography through Facebook and search, etc. All meant to kind of do a full geographic lift. I think you're going to want to see like probably several $100,000 of spend. And like I said, then you're also going to want to do 1 or 2 different markets simultaneously, because maybe there was something nuanced about that particular market at that time that didn't make the measurement clean. And then you can compare it to similar like markets that you're not spending into at the same time to see kind of if there is a bit of a lift in that market. So my recommendation is like, that is probably at a point of like, you have a pretty mature marketing budget and you have a pretty mature marketing funnel.
Got it. Okay. Let's see if we can do a couple more. Which off-the-shelf marketing tools are you using for your online channels?
I mean, we're using a ton of different tools. I mean, so the basics that we use, Google Analytics. Obviously, we use like Facebook directly to do a lot of the optimization. We have behind the scenes segment instrumented for all of our data analytics, and then we use Looker to kind of drive reports. In TV, our partner was Tatari, and they have a pretty fantastic digital platform for monitoring your TV spend. So each of the different channels often has its own analytics platform. So the same thing with mail, they're going to give you your own reporting. Outdoor, each of the different advertisers also has their own level of reporting. So we use all of those reports. We tend to combine those ultimately, in spreadsheets, because there's no other better way to kind of pull it together, and then combine that into kind of our larger data reporting through Looker.
Got it. Okay, thanks. So with channel marketing, what trends are you most excited about, and what emerging channels do you think have the most potential?
Yeah, I mean, again, this one's going to be very category specific, because there's probably some really exciting emerging channels that are very irrelevant to our customer base. So I know like there were points that people were coming to us from like Snapchat or other emerging platforms that are maybe a little bit more targeted towards millennials or younger audiences. Our audience tends to be kind of 30 and above. So we haven't been able to test as many of those new platforms. We were very excited about Pinterest. I have to say Pinterest has continued to be a struggle in terms of their analytics capabilities. And while it just makes perfect sense for our audience to be advertising on Pinterest, like people go there first when they start thinking about home projects, we just have not been able to clearly track the ROI and optimize our campaigns such that the CPAs are like as efficient as we see in other channels. So, I mean, I think that like it's basic, but I've been most excited about the ability to use analytics to track kind of the historical offline channels or the harder or sort of the original channels like TV and radio. I think that like it's incredible the power of combining very, very massive scale channels that have a lot of historical context that you can look back at for like what performs well in terms of ads and messagings and length of your segments, etc. But then to be able to combine that with your digital tools to understand traffic patterns when a spot airs, click-through rates, sign-up rates, the ultimate ROI of that customer. To me, that's probably the most exciting thing that's happening right now.
Yeah, for sure. Is there a chart available anywhere of overlap outreach rankings of the different channels?
A chart available, say that one again,
of overlap outreach rankings of the different channels.
I don't think I understand that question. Overlap outreach rankings. Maybe somebody can follow up with me, explain what they're asking.
Sounds good. How about, there's a follow-up to our mailer question. How did you measure the success of the mailers to understand which of the two types worked better?
Yeah, so I mean, the great thing is that the different mailer solutions out there, and there's quite a few, have their own analytics and tracking systems. And you oftentimes, like, they're all like, there's a promo code that you end up putting in it, right? So you can, on your end, track the ultimate conversions, but they're able to show you all of the data about how many, like, who this sent to in the country, how many mailings there were. They're able to do some predictive analysis based on your initial promo code usage and your initial conversions to be able to predict what the kind of long tail of that will be. So it was, for us, it was very straightforward. In fact, one of the more straightforward channels to be able to segregate and understand the exact ROI of that channel.
Got it. And we're right at time, but I don't know if we've been kicked out yet. So we'll try one more. Which organic strategies worked well and which didn't?
Oh, that's a great question. Organic, I mean, obviously it's extremely, extremely important portion. We found that we did not invest enough in SEO early on. So we did invest in our blog, and I highly recommend that. And we were there very, very early, and it's been an extremely important channel for us in terms of growing and offsetting paid. We did not make the choice to instrument our core website early on in an SEO favorable way. We instead used like a very popular framework for web called React. And so we ultimately switched over to WordPress, and our just kind of core SEO is really kicked in. That, to me, like, it's very, very basic, but it's the most powerful organic. Obviously, you want customer referrals and word of mouth, but that is a slow and long strategy. Like, there's no way that we found to speed that up. It's patience. And then good PR. Like, we hired a good PR firm early, and it's been very worthwhile. Everything organic, in my experience, is a long patience game. Like, you need to make the investments much earlier than you think, and you cannot expect to see results for like 1 to 2 years. But if you do make that investment early, it pays off long term.
Got it. Well, thank you so much. Joanna is telling us that was the last question. So have a great day, and thank you. And folks, if you have extra questions, please feel free to reach out to us. Email, LinkedIn, we'll be around.
That's great.
Thanks, Sean.
Bye.